Welcome to Traders Terminal. Based on your vote count, we've decided to share a lesson on Relative Strength Index. In this video lesson, we'll cover what is RSI, how to use RSI, trading with RSI, limitations of RSI, and also we'll share a bonus trading strategy with stock recommendations. Alright, let's get started. So what is RSI? RSI is Relative Strength Index, a momentum oscillator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of the underlying asset. An oscillator is something that moves between two ranges, an upper range and lower range, and RSI moves between 0 to 100 values, and hence we say it's an oscillator. So we will not get into the mathematical calculation of RSI, but to simply break it down, RSI is comprised of three basic components: relative strength, average gain, and average loss. Relative strength is the ratio of average gains to average loss. In a 14-period RSI, which is the default setting, a 0 RSI reading means prices moved lower on all 14 periods and there was no gains to measure. RSI reads 100 when prices move higher on all 14 periods and hence there were no losses to measure. So how to use RSI? RSI is considered overbought when above 70 and oversold when below 30. These traditional levels can also be adjusted if necessary to better fit the security. What we mean is there is no particular thumb rule as to what level of RSI should be considered overbought or oversold, but there are guidelines. For example, if a security is repeatedly touching overbought levels of 70, you may want to adjust this level to 80. In an uptrend or bull market, the RSI tends to remain in the range of 40 to 90 with 40 to 50 zone acting as pivot levels. During a downtrend or bear market, the RSI tends to stay between the 10 to 60 range with 50 to 60 zone acting as pivot or resistance in this case. RSI is popularly used with MACD, EMAs and by price action traders. Trading with RSI. So what are the different types of RSI related strategies one may use? Number 1. Divergence. Divergence in RSI and price chart indicates a potential trend reversal in the underlying script. As we can see from the chart shared next to it, a bullish divergence occurs when the underlying security makes lower lows and RSI forms higher lows. A bearish divergence forms when the security records higher highs and RSI forms a lower high. Number 2. RSI double bottom. RSI double bottom is also widely used for trend reversal trades. Long positions can be taken when the RSI reading breaches the highs after the first bottom. Number 3. RSI for support and resistance levels. RSI is used by many professionals to determine support and resistance levels. The security price when RSI reading is the lowest in the decided time frame will act as a strong support and vice versa for resistance levels. In the chart shared below, when RSI made the lowest low, we found our support levels, and when RSI made the highest high, we found our resistance levels. So before getting to the bonus trade strategy and stock recommendations, it's important to understand the limitations of RSI. Since the indicator displays momentum, it can stay overbought or oversold for a long period of time when an asset has a significant momentum in either direction. Therefore, the RSI is most useful in an oscillating market where the asset price is alternating between bullish and bearish movements. If you use divergence as trading signals, it must be noted that divergences are misleading in a strong trend. A strong upward trend shows numerous bearish divergences before a top actually materializes. We can see that from the chart shared right next to it. In a strong uptrend, RSI was showing continuously overbought conditions, but the stock price kept on moving on the higher side. RSI as standalone indicator is misleading on many instances. For intraday traders, chart price actions and MACD confirmation can be more effective. So now it's time for bonus RSI strategy with stock recommendations. We have used multiple time frame RSI to explain you the strategy. A multiple time frame crossover in RSI is one of the least talked about strategy used by professionals. For example, one may use daily RSI and weekly RSI for swing trades. If daily RSI crosses over weekly RSI, momentum buying attracts long positions and vice versa. Positional traders may use weekly and monthly RSI in that regards. Our strategy is based for positional traders and we've used weekly and monthly RSI. Bonus strategy criteria for defined uptrend. Below are the 4 points which once met qualifies the underlying security for a defined uptrend. Number 1. Weekly RSI should be greater than 55 levels. Number 2. Monthly RSI should be greater than 50 levels. Number 3. Weekly RSI should be greater than monthly RSI. And number 4. RSI should be below 70 levels. So what are the stocks which qualify for a defined uptrend? We've picked Nifty 100 Index. Number 1. Biocon. Number 2. Cadila. Number 3. Lupin. Number 4. Sun Pharma. Number 5. Auropharma. Number 6. Cipla. So I'll explain Biocon to you so that you can understand this strategy. This is the Biocon weekly chart. As we can see that the Biocon weekly RSI is at 66.2 levels. And this is a Biocon monthly chart, and as we can see that the monthly RSI of Biocon is at 60.3. Hence it meets all our criteria. Alright, with this we conclude today's lesson, Trading with RSI. I hope you've liked this video. Please do like and subscribe. Traders, you can follow us on Telegram. Our Telegram link will be shared in the description below. Happy trading!